Hey, good morning everybody. Today is Wednesday, July 27th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Just a quick note, due to an early morning commitment tomorrow, there will be no video market review. See you again on Friday the 29th. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 23 came from semiconductor devices, 5 from the auto parts industry, 5 from consumer finance. We had 5 from commercial and residential building equipment and systems. And rounding out the top 5, we had 5 biotech stocks in the 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of semiconductor devices recently, and consumer finance is beginning to come on fairly strong. Commercial residential building has also been strong recently. These might be good places to look for leadership in this market. Let's take a look at the Nasdaq composite. Yesterday, the Nasdaq was up 12.42 points, or just under 1/4%. We closed at 51.10, and notice how we bumped right up against this trend line. This trend line goes all the way back to the beginning of the bull market back in 2009, and has provided significant resistance over the past year or so. It'll be interesting to see if we can break through the trend line and test resistance up here in the 51.64 area. Trading volume yesterday was above average and it was above the prior day, giving the Nasdaq an accumulation day, or a day of professional buying. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since June 30th. We have 2 distribution days since confirmation of the uptrend. That's not a lot of distribution. One of those distribution days was really weak. And so I don't think that distribution is a particular concern in this market at this point. Our market timing model is on a buy signal. The buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Right now, the Nasdaq appears to be bracketed by support down here in the 49.69 area and resistance at this trend line. Apple came out with good earnings after the market closed yesterday, and it looks as if the market's going to open a little bit higher today. We'll see if the Nasdaq can take out this resistance today. See what the S&P 500's up to. But before we do that, after erasing earlier losses, stocks finished mostly higher on heavier trading volume yesterday. The S&P scratched out a 0.03% gain, less than 1 point, but enough to give it a weak and insignificant accumulation day. The Nasdaq closed 0.25% higher, giving it a little bit more significant accumulation. Accumulation occurs when one of the major averages closes higher on heavier trading volume than the prior day, and is an indication of buying by the professional money managers that move the market. Both the Nasdaq and the S&P continue to respect significant support. For the Nasdaq, that's at the psychologically important 5,000 level. For the S&P 500, it's the May 2015 high in the 2134 area. It would be constructive to see the market consolidation hold above those levels. Our market timing model on both the Nasdaq and the S&P 500 is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating a confirmed uptrend in the market with 2 distribution days on the Nasdaq and 3 on the S&P. Yesterday, advancing issues edged decliners by better than a 3-2 margin. New highs continued to handily better new lows. For the first time in a while, small capitalization stocks bettered large, but large continue to outperform on a 10-day moving average basis. The fastest market gains generally come when small caps are outperforming. We're on a buy signal on both the S&P 500 and the Nasdaq, but the current advance may be losing some steam. While traders should be fully invested, or at least approaching fully invested at this point, they should also be keeping stops in place in current. Okay, after trading lower most of the day, yesterday the S&P 500 managed to eke out a small gain, 0.7 of a point, or 0.03%. We closed virtually unchanged at 2169. Trading volume was heavier than the prior day, giving us an accumulation day. The S&P is in a confirmed uptrend. We have 3 distribution days. This distribution is starting to get a little bit old. The older distribution gets, the less significant it is. And so this distribution day really at this point is becoming a little bit insignificant. These 2 days, only one was a real significant distribution day, and so I don't think distribution's a concern for the S&P either. Our market timing model is on a buy signal. The S&P has support down here in the 2134 area. That's a prior market high set back in May of 2015. Note that the S&P really hasn't made any progress in the past week. It'd be nice to see the S&P put in a good solid candle here on heavy volume. Okay, let's talk about swing trading. Swing trading is a faster, shorter term form of trading than CAN-SLIM. In swing trading, we'll attempt to always trade in the direction of the short-term market trend as defined by the relationship between the Nasdaq Composite and its 5 and 10-day simple moving averages. Our swing timing model has 4 signals based on those relationships: buy long, trending positive, trending negative, and sell short. Currently, our swing timing model is on a buy signal. Swing trading utilizes a much shorter term setup than CAN-SLIM. Those setups, both long and short, are short-term consolidations, flags, and bounces from significant moving averages. These setups can be as short as 5 days. We try to purchase all swing trades with buy stop limits at the precise breakout point, but generally sell only at the end of the day. Our swing trading targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to our rule sets. Let's take a quick look at the Nasdaq Composite. Yesterday, the Nasdaq closed above its 5-day simple moving average, above its 10-day simple moving average, and the 5-day simple moving average is trading above the 10-day. That's our definition of a buy long signal. A buy long signal allows us to take swing trades to the long side. We currently hold 3 swing trade positions. AMH, which we bought on the break above this short-term consolidation at 21.25. Notice how AMH continues to hold above its 5-day simple moving average. A close below that 5-day simple moving average would result in a sale of AMH. MKTX. We bought after a short-term consolidation when it broke above 153.26. And yesterday we bought XRS. XRS actually broke out above our pivot point at 64.29 the prior day, but reported earnings after the close, and so we held off buying it until after the earnings report, and so we bought yesterday at 64.29. Finally, we were stopped out of Mobileye for an 8.07% loss after all fees and commissions after its earnings report disappointed yesterday. Generally, we'll sell positions prior to earnings reports. MKTX reports earnings tomorrow, so we'll sell today at the close. For more information on swing trading, please contact me. My contact information is on the homepage. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.